Good morning, traders. Welcome to BCR's daily market update. Today, we'll be covering the US dollar index, crude oil, gold, and AUD USD, analyzing recent market movements, key technical levels, and the impact of geopolitical and economic factors on the asset. Let's dive right in. Last week, the US dollar index saw mixed movements. Initially, it spiked to 104 after 3 days of sideways trading, driven by weak US inflation data and strong employment numbers. However, market sentiment flipped when Trump announced a 200% tariff on EU wines, which contributed to volatility. Despite this, the US Treasury yields rose, pushing the dollar above key resistance levels. Looking ahead, the upside risk for the US dollar lies in levels like 104.29 and 105. But we must remain cautious about potential volatility with support at 103.23 and 103. Coming on to crude oil, oil prices remained largely flat last week due to geopolitical concerns, especially over the ongoing Russia Ukraine conflict and growing fears of a global economic slowdown. Although global oil demand growth has been downgraded, some technical indicators are showing signs of potential oil price recovery. Resistance levels are at $67.67 and $70, while key support levels at $65. If demand worries persist, the downside risk could push oil towards the $62 level. Gold prices hit new record highs last week, briefly breaching $3,000 amid concerns over President Trump's trade policies and rising expectations for US interest rate cuts. With gold seen as a hedge against inflation, even with falling inflation rates, it continued to rise unexpectedly. Technically, gold remains in a strong bull market with a support around $2930 and resistance near $3018. Should it break above $3000, a push to $3032 is possible, but a drop below $2930 could signal further losses. Finally, the Australian dollar struggled last week due to US trade tensions, especially with Trump's tariff on Australian exports. The Aussie was also weighed down by pessimistic global growth outlook and local economic uncertainties. The currency broke key support levels, and technical indicators suggest further downside risk. The next support is around 0.6265, with resistance at 0.6348. If the 0.62 mark is broken, further declines could follow. To summarize, while the US dollar is testing key resistance levels, geopolitical risks continue to drive uncertainty in crude oil markets. Gold remains a strong hedge, but caution is advised in the current market. The Australian dollar faces further downward pressure due to trade tensions. Keep an eye on those key levels and potential market shifts this week. Thanks for watching. Stay informed and trade safely and wisely.